Hello and welcome to Money Control. Well, after the deep cut yesterday, the market seems to have stabilized a bit. Even as we speak, the Nifty is up about 1%, a little more than that. But the momentum stocks, especially what is the so-called Modi stocks, continue to be at the receiving end today. REC, PFC, a whole bunch of stocks are still down about 5 to 7% this morning, while some of the other names like HDFC Bank, Kotak Bank, which had nothing to do with the election verdict, have shown some kind of pullback. Where do we go from here? How do we navigate the momentum stocks? Where is value? How do you play this market? Have you found a bottom? To find answers to all of this, we have a very special guest today, Sandeep Tandon from Quant Mutual Fund. Sandeep, thank you so much for joining in.
Yeah, thanks for inviting us.
So, Sandeep, how did you navigate yesterday? Did it come? It came as a jolt for a lot of people in the market, except people who were already positioned on the short side. How was it for you?
See, frankly speaking, Mahalakshmi, since it was an event risk and we have been working for a while, for last many months, we were preparing for it. Obviously, it's very difficult to predict the final outcome, but in terms of cautious approach, we are pruning down our high beta portfolio, moving from mid and small to large cap, focus from illiquid to liquid stocks. So that was a part of a risk management strategy anyway we were working. We have pruned down PSUs, we have pruned down metals, we significantly increased our exposure in last 4-5 months in the convention name. So those are things which really helped us. See, frankly speaking, this is a mind game, If it comes as a surprise and you are not prepared for the surprise, then obviously you will tend to make more mistakes. Okay, we were not saying that we are prepared for it, but we have rebalanced and reconstructed our portfolio in such a manner that we were willing to absorb that shock very easily. Okay? And that's the reason we didn't panic. We have not sold even ₹1 share yesterday. Okay, in our entire portfolio. We will just wait and watch sort of approach. Right. So neither we got excited there for yesterday when most of the stock it rallied also, nor we were too paranoid or too capitulative when it happened yesterday, because the event you have to live with that. And in fact on multiple channel, at least I was one voice who talked about this opportunity to buy, go all in. These are the event which gives you phenomenal has spiked. So we talked about whether VIX has peaked out or VIX has given a breakout. So we said it's peaking out from here. VIX upside is limited. So great opportunity to participate. So I was actually quite constructive on the market. Okay, we were addressing large investors, many calls we called. So we were actually endorsing this a great buying opportunity. Sometime, when event risk plays out, and if you can play it wisely, okay, then you will realize the benefit of this aggressive view at some point in time, maybe later stage you realize, yeah, that was a great opportunity. So obviously in market, I always say short terms are driven by narrative, and one should not get carried away with narrative, and one should have understanding of differentiating the narrative versus reality, which is a very difficult task. But as a quant, since we quantify everything, we try to attempt in that direction, and we are partially successful.
Absolutely. So first thing is, of course, you are saying it was a buying opportunity. So do you think the market has really made peace with this verdict? How do you see today's up move? Have we already found a bottom? Is that the bottom, or in the next few days it could test lows as well?
See, frankly speaking, it is very difficult to pinpoint exact thing. But if I look at it, since we are an analytic house, and if I look at yesterday itself, I said we have seen the bottom. Okay, so when VIX spiked nearly 31%, I said maximum it can go to 32, 35. It's very difficult to pinpoint exact numbers, but historically we have seen something like that, because unless it's a bigger crisis, it goes up to 75 to 86%, which is what happened in COVID or what happened in Lehman crisis. And I don't think yesterday this was any crisis-like situation. It was just a shock, in the sense people are more mentally prepared in one direction and the outcome was in other direction. So that was the shock. But I personally felt yesterday itself was a great opportunity, and today is gathering momentum. See, one has to look at from a... I think I lost you. Hello?
I can hear you, Sandeep.
My camera is there and gone.
I can hear you, but I can't see you.
Okay, 1 second. Just a second. I know that, but what happened?
Okay, we'll have him shortly back, but just a quick check on some of the stocks. I mean, today, some of the stocks, at least I saw in the morning, that RDC was down, PFC was down, HAL. These were some of the, poster boys of this, at least the top Modi stocks. Some of them were still down about 5 to 7%. Others have recovered. I think we have Sandeep back. Yeah, Sandeep.
Can you hear me? Yeah.
Yes, Sandeep.
So I was explaining, ki some of the data points was very constructive in yesterday. Now let's sit down and always say, instead of reacting in a situation and everybody is paranoid, let's say what has changed. Okay. Yes, people were prepared for one direction. That outcome is not there. It is fact. Now let's understand from a macro perspective, if something dramatic has changed for India. Answer is big no. Okay. Are we saying that current prime minister or current government is not coming? It looks like with the instead of BJP government, if you heard his speech very clearly, and it is now NDA government. The NDA government is coming. The concern which people have, whether the policy continuity or focus on infra, focus on capex, okay, whether that will change, and people have already given a verdict. It has changed. That's the way the reaction is, and I don't think so. Okay, so because a lot of people have leverage position, or people who buy for event, or who are very short-term investors, they all panicked yesterday because they all felt something has changed now, and overnight this they have capitulated. Now our entire thesis is that if you really look at from an India perspective, when we say India is a great buying opportunity for a decadal perspective, few decades perspective, or maybe half century, that's the way we define India. Something has changed in India for a longer term perspective. With that background, I have been saying for a while, India is buy on dip strategy. And if you really look at from post-COVID scenario, right from March 2020 till today, we have seen multiple times market has corrected 12% to 20%, very steep fall, and everybody gives up. And again, market becomes light and market comes back, and we have seen quite often it has touched new high, not only in absolute basis, but it has outperformed the global market also. So with that background, I personally think nothing has changed in India except our mindset that something has changed drastically, maybe closer to the budget, closer as we see the policy announcement coming and government taking the oath. I think market will start settling down, but I always believe whether there is any event related reasons, market do sector rotation. That's the way we always try to rebalance our portfolio. Okay, when we see stock rotation, sector rotation based on the analytics which we track. Anyway, that's the part of our approach which we continuously follow. So what will change? Maybe some sector or some stocks might get derated in terms of earning multiple. The hype which was there, they can correct and consolidate for a while, and maybe something new will emerge. Today, you're seeing the consumptions are coming back. Okay, so I think these are the way market is always going to operate. Sometimes it's bound to happen, but you don't have any reason for that. And today, in the social media's world, and everybody is so proactive, everybody comes out the reason for that. So postmortem analysis is very, very easy, and everybody try to justify why it happens. Okay, so that's the reason we don't believe in postmortem analysis. We work on a concept of predictive analytics. If you can see what is coming to analytic, then it helps you just from a stability point of view. Nothing, because this is if your mind is stable, you will able to do better calls or judgment rather than just reacting in a situation.
So, Sandeep, I heard you say that the larger infrastructure story and all the some of the themes are not going to change because this coalition will not change tack in terms of policy. What is the real risk you think because of a coalition government? Because that is the center of this conversation, that people were expecting that BJP on its own will get 272. Beyond that, nobody cared how many seats they got. But now that number is not 272, it is 240, is where the nervousness really stems from. What can this really change? Realistically speaking, I take your point that the larger infrastructure revival theme, the capex theme, may not be touched entirely, but what changes that you think could be risk to, if not overall markets, even to specific quarters?
See, Mahalakshmi, frankly speaking, if you sit down and analyze rationally, from a government perspective, I think the continuity of policy will continue. Let's look at the support when talking about coalition governments. In the past also, there is no specific reason that coalition government has always done a populistic measure. And maybe let's say if you look at the UPA part one was reasonably good, okay, and maybe as compared to UPA part two, okay. So it's not be fair to say that. Look at the some of the important partner, and if you look at very unbiased manner, let's not bring our personal emotional attachment, which is the mistake people do. Like Chandrababu Naidu, okay, he has revamped. If you look at the way Hyderabad is today, is much before the previous government. He was in the driving seat. He is the guy who has capability, understanding on technology, telecom. He has put in so much effort. Very forward-looking person. That's the way I understand, and whatever a little bit I've read about him. And I have been to Hyderabad so many times. I have seen the changes happening much before when he was in the driving seat. So I think he's also very develop-centric partner, which he has then very openly has said that he's going to support if he's a part of NDA. So I don't see a second most important member of the NDA is also has been very, his own track record has been very constructive. In last many years, every state is working towards development, whether it's coming from the BJP background or people are coming from Congress or some regional party. I think the development agenda has not changed. What has changed sometimes the narrative, the how you present that thing, what you talk about. Okay, even Yogi has done a lot of great things in the current, if you look at in last two terms. But prior to that, even Akhilesh has invested a lot on the infrastructure, and so is the case with Mayawati also. I think we as an analyst, and sometimes we do get carried away and try to read now their powers are slightly diluted or they don't have maturity and everything will not be as good as what they have talked about. Maybe some tweaking happened, and that's the way life is all about. That's the reason we always say we have to keep on rebalancing and reconstructing our portfolio based on the environment. Some policy decision can be tweaked. Answer is no. Answer is yes, it can happen. But if you ask me whether larger thesis, whether this the policies initiative taken on the digital side, or you talk about the tax related reform which happened in the country, or the real estate related reform which happened, can you reverse that? Answer is big no. Maybe the pace of reforms which people were anticipating, maybe that may not be materialized as early as what the hype got built or the people who started perceiving. But I think, frankly speaking, Mahalakshmi, it will be too premature to take that call also. I will like to see, let's wait for the budget, whether you see anything drastically change in the budget, okay, or let's wait for 1 quarter when he is talking about his next 100 days plan. I don't think as an analyst nothing can change, okay. Maybe some policies can dilute it, something can be said, and that is anyway part of life. It always happens, okay. So I'm not going to be too upset, and since I always believe if India is in such a unique situation, okay, where something has changed from a longer term perspective, I will always advise retail investor to be long in India. If you don't like a particular sector, you can switch either to mutual fund, flexi schemes, or some other thematic fund which you like. Yeah. But just remain invested is a phenomenal opportunity. If you move out, you will miss the bus.
Correct. Sandeep, one question on these reforms, because I'm not able to put a finger on, what are these reforms that the stock market is really counting on and therefore worried about? Because whoever I've spoken to, mostly in the last 2-3 months, have only been worried about one thing, which is, the long-term capital gains tax. If that is taken away, then it will be a jolt for the markets. On the positive side, people talk about farm laws, people talk about, labor reforms and stuff like that. The stock market so far, not only in this regime, the previous regimes, yesteryears, have continued to do fairly well in bouts depending on the economic cycle and the market cycle, despite these reforms not happening. So what is it that the market was, you think, if at all, counting on that it is worried about?
See, I tell you, frankly speaking, everybody has their own perspective, and sometimes based on your portfolio, you have your own perspective, because that's the way the biases comes into it. Okay. Now, if you look at for us as a house, I think the biggest reform which is required is on the electoral front itself, judiciary reform, labor reforms, okay, even the farm reforms, okay, and even the land reforms, which is some of the biggest thing is spending. Maybe something can be deferred, something come with a lag. All these things will be a possibility because when you work on your individual basis and when you work in a correlation basis, maybe some perspective things, some timelines can be changed. But ultimately, we are moving towards larger thesis of one country, one nation, one tax, one judiciary. All those things will be part of it. So, but it might take some time. So I'm not very much tense about it that something has changed about it, because the problem with the industry is that the majority of the as analyst community, I also come from thinking, because everything is dependent on this dependent variable called price, and when price changes, a lot of perspective get changed, and that's the reason we don't give this much too much weightage. We try to reduce the weightage of this dependent variable called price. Once you do that, you will able to take a far better call, since everything is linked with the price and prices correctly. Today consumption stock rally, look at, I have seen so many analyst upgrades have come because prices drives you. Okay, we have been saying for last 4 months or 6 months, when we launch our fund in January, we are seeing early signs of consumption. Okay, that's the time where rural economy is picking up. So I think when price correct, everybody mindset also changes. See, one has to look at a very important observation I will say about the market. Okay, majority of the people, I will say, in the industry, okay, and particularly are a momentum house. Okay, and when you look at, and a lot of people consider us as a momentum, actually we do inflection points. But if you really look at, let's take example of PSUs, let's take example of railway, defense, okay, and some of these names which we are talking about, in last many quarters they have been moving up, but most of the market participant, if I have to say, mindset got changed, okay, and they all got sucked in last 1 quarter, virtually at that. And this is if you look at the volumes, the euphoria which we see. So obviously something which you have bought when your conviction is not there, when you are buying something which is based on the left out feeling or fear of underperformance, when you tend to participate in these names, okay, and I'm not talking about PSU, any stock, this is a human side. And typically what happens when something is changed or something is shaken, you vomit first, because you have not bought this name with a conviction. You have bought under compulsion, or like what I call it, market psychology. That's the way the pressure gets built and you get sucked in at the peak of the cycle. And hence you give up. And when you give up, you don't bother too much about prices. The exit becomes more important rather than the price. And this what happened yesterday. The exit was more important than the price. And this is the way we try to identify this inflection point. It gives us a great buying opportunity when people are giving up, and if data points are convincing. That's the reason yesterday on multiple channel I harped about is a great buying opportunity. One should not miss it. And I still maintain that view. Okay, maybe today's rally, small dip can happen maybe next week. So whenever, because it's all about the government formation, announcement. So all those uncertainty could be there. I think broad trajectory for India is still very constructive, irrespective of the outcome on the political front. So I think we remain very constructive as a house, and since we manage public money, masses money, and as an institution, we tend to capitalize on such phenomenal opportunity which was there yesterday.
Right. So, Sandeep, would it be correct to then say that, fundamentally, have things really changed, or this is just a question of valuation correction? Because some of these pockets were anyway running ahead, as if this trajectory will be on a higher path for a very long time. And this is obviously reflected in implied growth for many stocks are, more than 30-40%. So it's hard to imagine how some of those companies would have compounded at that rate, till eternity. So is this just valuation excesses coming back to ground level, or is that all there is to it?
So Mahalakshmi, I always say, let's not look at as a house. We never try to look in isolation. When you look at valuation in isolation, you don't get all perfect answers, and that's the reason in our VLRT framework we try to bring liquidity angle, the second dimension about liquidity, the third dimension about sentiments. When you blend all these three, what I call it qualitative, quantitative, and behavior, when you blend all these three data points or these three analytics, you do get better answers. See, nobody has cracked these, and then somebody has a very unique thing and you get a perfect answer. It's not possible. What is very important to
Right.
understand the absolute thing and relative also. So what is the prevailing environment and how we look at let's example defense. I'm just giving you example. Okay. Valuation was stretched. Answer is yes. They have been stretched for a while, but the thesis was getting built. India on the defense side, export story, PM vision, which is all correct. But these are things. Is that export will happen over a period of time? It's not happening tomorrow morning. So valuation was priced in, and then you see the left out feeling. The massive liquidity was there. Okay, if you look at the liquidity analytics and the volumes in the market, it'll give you fairly sentiment was so positive. Okay, maybe 7-10 days back, I have seen multiple upgrade came onto the defense stocks, and you see a euphoric move, and that was a very classic sign of euphoria. Now, if you really say that has euphoric happened, now we have capitulated, maybe from a medium term and short term perspective, yes, we do have capitulated, but it will be too premature to say that they have got into the neglected territory now. It takes time to reach there, and you also have to keep in mind when I use the word relative, because if we are in decisive bull run, okay, you may not get those extreme neglected zone, which is a great buying opportunity. Let's say what we spotted in metals last year or pharma last year or consumption of quarter back. Okay, if you ask me whether defense as example has hit those neglected zone, answer is no. It can correct and consolidate further. Answer is yes. But once it hit those neglected zone, people will we be looking and closely and we rebuilding those positions out there. We don't have any love and hate relationship any sector in stock. But what is very important for us to understand, when multiple data points are skewed in one direction, it really helps us in taking aggressive call whether to exit or whether to rebuild your position or build a new portfolio.
Right. You said, are there any pockets, at least top three pockets, where you think there are still excesses?
I think stock specific I will not talk, okay, but if I say access has been on the capital goods side, okay, where we have seen multiple houses have also launched a manufacturing fund, so very large money has been deployed in this space, and the capital goods space, because India capex cycle has been played out very well. If I have to say no, I will not use the word bubble. If they are trading in the admired territory, I think it's a capital goods is one sector which is trading in the admired territory, and it's one of the reasons we have exited from this sector completely.
Okay. And you were talking about, buying at these levels. So where do you see buying opportunities?
So, in terms of if you really think from a very rational perspective, I think consumption is definitely one area which we're looking at. The second area is all about larger infra thesis. Okay, if government the related uncertainty gets over, let's say in 15 days time, 20 days time, or weeks time. Okay, I think larger infra company, whether it's talking about metals, cement, anything which is, I don't think they have hit even admired territory. There's still some of the stocks still are neglected, and something are somewhere in between. So anything related to infra, anything related to power stocks have rallied definitely, but if you look at their ancillary companies, they should do. Don't talk about auto has done well. Maybe some select auto ancillary company one can look into it. So there are very pocket. Media also looks very attractive. Media is one sector which is trading in the extremely neglected and the most hated territory. So media is one sector, if you can say, which is something which is we are very confident about it. But the problem with the sector is very limited stock and the size of the sector is very small. Okay, and even if I had to look at some of the private sector banks came into neglected zone, not the most hated zone. Okay, some of them, and we rebuild exposure in one of those names where we saw some amount of neglected territory, and as compared to what was few months back. So I think this opportunity keeps on coming in the market. Let's say example now PSUs have corrected sharply 20%, 30% sort of thing. Some still are correcting even further today. Okay, if we get such a sense that some of the stocks have hit the neglected territory, okay, because I'm sure they can't hit the most hated zone if they get in the neglected zone also. I think we will relook because the exposure which we pruned down, I will like to rebuild those exposure, but I will wait for right opportunity instead of just saying that no, market is corrected, so it's a great time. When perfect data points come, we will buy it in these names because the larger thesis of PSU, larger thesis of metals, and I'm always talked about the larger thesis of values, a decadal call. All those stocks which are part of value as a thesis should do very well. Today, let's say to get consumption name, which generally people call as a growth stories, have come back. So I am always believe that no moves will going to be linear. But if somebody has a decadal view, I think value stocks should do very well. And we will look for opportunities when they hit the neglected territory zones or the if I've seen some of the names also coming the most hated zone also, then we will be aggressive buyer in those names.
Understood. So within consumption, Sandeep, obviously one theme that is really played out, and now there are also a whole bunch of thematic funds launched around this thing, which is premiumization. Now, of course, one of the things we need to see what the next budget is going to talk about. We're already seeing some signs of rural recovery, which the Nielsen report sort of hinted at. And maybe, who knows, that in this budget you might see, that's one of the fears of the government, but it could actually work out to the contrary. What is your take on what part of consumption will be in focus? Where are you buying?
So we were very specific on the food companies. Okay? So our entire focus within the FMCG, we have built a large exposure on the food-centric company. Because if you really, when the first demand picks up, the rural stress reduces or it comes back, the food will be first which comes back, and then followed by staple. Okay? Now I don't have aggressive view on the consumer durable names as of now. Okay, because if you really look at post-COVID, it has really hurt the rural market. The rural economy was shattered actually. Okay, and what was worst for them was the inflation, and it's not a local phenomenon. Global inflation has really hurt them. Their earnings has not moved up to that extent, but their cost of living has moved up. I know people in the family who use the milk content and there's some of the vegetables, some of the grains also. I think that was a very poor state of situation which we have seen very recently. I think with this, this the last crop, a Rabi crop has been good, and I think this is the one area where I also believe the current government will go back on the drawing book and try to understand what has hurt them. And I think inflation was one of the reasons where it has impacted them also, because inflation, some people sitting in the urban area, you and me, may not able to feel it. But in rural area, the impact was very radical. I think something will come in the budget side, I also expect, which might lead to increase in consumption. Though a lot of people take this as a negative in the market, okay, the focus of infra, move out, and ultimately, as a country, and the government has to manage both. They have to ensure that the lifestyle of the masses should not be suffering. Okay? It should not happen. You keep on investing on infra and they are suffering, then it's also not a great news, okay, from a longer term perspective. I think some balance will come, and that's the reason market is celebrating this sort of thought process, that something like that is come. But that does not mean if this happen and then the infra will go on the back seat. I don't think. Maybe some rebalancing can happen, and I think it's a right approach to rebalance, because ultimately they are responsible for masses.
Sandeep, you are a very price conscious buyer, and you also talked about it earlier. And also now, this consumption theme is coming into focus. And a lot of investors, including you, have stayed away from consumption theme only because, the prices are not attractive enough to give you the confidence that they will even give modest returns over the next few years. How do you marry these two? Do you see value opportunities in this space?
Mahalakshmi, frankly speaking, I always said that we don't look prices in isolation or valuation multiple in isolation. Then you don't get the true picture. Okay, let's say when we launch our consumption fund in January, and we are as a house specialized in the analytics, so a lot of high frequency data was endorsing that something is changing, which is not easily visible in multiple data points. When you look at the combination, we spotted that the ground reality is improving. Okay, and that background we also assess. Simultaneously, we notice that these consumption names, particularly staple, were actually trading in the neglected zone. Okay, so it was a very ideal situation. Macro data was supporting. From a behavior perspective, they were trading in a negative territory. Yes, their valuation was not as attractive as I want to be, but they have on relative basis they have corrected a lot as compared to the past where it used to trade. In the combination, it was gelling well in our thesis, and that's the reason we added some of the food company aggressive in our portfolio, liquor company in our portfolio. But if I could have looked at purely on the valuation thing, then I could have not bought these names, which we are enjoying the benefits of.
Okay. Within the financial space, I know that I saw in your portfolios you own quite a bit of HDFC Bank and a few other private sector banks. What is your take on public sector banks? Have they topped out?
So we have exited.
Because even today I think SBI is flat, but yesterday at some point in time it was down 15%. I mean, it was unfathomable to see SBI correct that sharply. What's your take?
So if you are familiar, right from September 2021 when we talked about as a thesis indicator, we build very sizable exposure in the public sector banks, and including State Bank or PNBs of the world. There in our public portfolio, Canara, Bank of Baroda, many such names were there in our portfolio. Check historically, we were very our portfolio were skewed towards public sector banks as compared to private sector banks. Hardly any private sector bank, except one or two smaller names. So at that time, the relative opportunities was far superior. They were much more attractive. Okay, and multiple data points. VLRT framework, which we spotted them, or through predictive analytic thesis, we spotted them. It was a better opportunity, and hence we were able to ride that rally. But last quarter, okay, we have exited majority of the PSU names, or I'll say largely we have exited, because we felt that it's not from that they have peaked out from a longer term perspective, but on relative basis, we felt some of the private sector names are in a better position. So, and hence we switched and we flipped our portfolio from these names to private sector names. So, it's a purely opportunistic call, but it is data driven. It's not a gut feeling call that they have corrected a lot and they have rallied a lot. So, we are doing. So, we are not a price dependent organization where everything is on the price, but multiple data points were showcasing that we seeing some sign. I am not saying the PSU have seen a signs of euphoria. Answer is big no. But they were, from a behavior perspective, they were started approaching the admired territory, and some of these private sector was a neglected zone. So it was making a lot of logical sense to flip this trade and switch from PSU to private sector. And actually, if you really look at in last whatever happened in last 1 week, we are actually beneficiary of that. The private sector, some of the name which built, they have not fallen, and the PSU stocks have fallen a lot. So we are actually beneficiary of that switch we played last time.
Right. One last sector that I want to talk to you about is real estate. How does that path look?
So, if you ask me from an economy perspective, we are very constructive because economy is going to the real estate will also. Okay, so we are very constructive. If somebody asks me from a few years perspective, we are very constructive. But if I have to look at purely from the market perspective and return perspective, then I believe that easy phase of bull run in real estate is also peaking. We are very early to spot 2 years back, and we also have pruned down our exposure. So now they are in difficult phase, okay, but they are still in bull run, but difficult phase, and that's the reason we have made some changes in our portfolio. We have sold some of the names. We have added some of the neglected territory names in our portfolio, so that my downside is protected and I am not exited the portfolio completely. That's the way I will define it. We are in decisive bull run of real estate, but within that, we are in difficult phase as easy phase is over. So I will be very choosy and very selective instead of buying each and every name or anything in the real estate.
Sure. This is my last question. What's your take on Adani stocks? Because I mean, you were one of the, perhaps the only fund manager who held, domestic fund manager who held Adani stocks before the Hindenburg report, and you were, I mean, your timing was perfect at that time. And I saw in your portfolios you own some of the stocks. I think Adani Power and one other stock. What's your take now? Does that get into a bit of a volatile territory because of political noise?
So first of all, Malaki, I'll not comment on the stock, but I'll just give you a general answer for that. See, I tell you, in January 2023, I distinctly remember the Hindenburg episode happened. Okay? And it just coincided with that time, India risk appetite also just collapsed sharply. So one of the reasons why we pruned down our exposure at that time, not only in Adani, but also in some of the leverage economy stocks. What is very important to understand, that time also was very negative. People were so negative on the group. Okay? And best of the analysts have sell report. As I always say, price is supreme. So reports are driven more from a side perspective. In price corrected sharply, the conviction on a sell report moves up. And I came from the same community of research analysts, and we still, the only thing we have changed ourselves when we don't look at price now at all, and we look at more other data. What is very important, and you look at the same community at 400 rupees, Adani Port is a sell, at 1400 rupees is a buy. Okay? I'm just trying to give you perspective. Multiple upgrades have come very recently. All those houses who were negative on Adani Group have turned very positive. Multiple money managers have never willing to touch this name. They have bought aggressively. Okay? So only point that I'm trying to say that sometimes narratives can be created, and in the market, the short-term narratives can be very different. What we have to look at the data points. Okay, don't bring the personal emotional attachment with anything, or try to get a perspective what media is talking about it, and then they try to link with some government or something like that. I don't think that's the way. We look at purely from the cash flow perspective. Let's say Adani Power, we have a very large holding in our portfolio, is there for a long period of time. We get the result which company is generating. It's in the public domain. Okay, the results have come. It's in the public domain that we own these things. Very large level, very high free cash flow they generate, massive EBITDA is there. So valuation perspective, very attractive. Okay, now if I say that if power sector is the, let's say, beneficiary, or because of the shortage, then only public sector will do well, or only few private sector. I think this is a tailwind for the entire sector. We like to capitalize where the valuations are attractive, and this is what we did, and we made money out of that. So I think I will not go with the narrative what is prevailing in the market and how people look at. I will look at the cash flow ability of that company, hard asset it has. Okay. So if I look at, and anyway we track this group for a while. Okay. So it's not like I've been tracking from 1995. So it's a data-driven approach, number-centric thing. We don't go by narrative what people think and what media is writing about or talking about. It doesn't matter to us. What matters is the conviction through analytic and through data points. If data points are supporting, we will be aggressively holding these names, and data point change, we have no hesitation in exit also. When I say when it peaks out from a behavior perspective. So I personally think these are hard assets. One should not just discount these things because something has changed in the central level or something and media has been talking about it. I don't think one should go by that. These are just narrative, and the Hindenburg is a very classic example. What was the narrative? And all stock have they have multiplied 2-3 times what on the Hindenburg's low. So if it was a bogus thing or completely fraud, then they could have not reached where they are. The reality is this hard asset based company, cash flows are genuine, infrastructures are genuine, and everybody has seen it. So I will go with the reality rather than just going with the narrative which somebody is writing or talking.
I'm asking because you talked about sentiment, right? Like public perception and sentiment, can that dampen the real hard cash flows and numbers that you are talking about? Can it take away a bit of the sheen? And is that a risk at all?
So one has to understand now the risk is much less, because last time when it happened and they came back, okay, so people have understood the assets were genuine, and most of the analysts have, or the money manager had made mistake by ignoring that. Now, if you really look at for any, and forget one group or one particular company, it's a very common thing, when some event happens, or some development happen more through policy perspective or perception through, you do get re-rated or you do get derated also. Okay, so I think in the current context, some of the sectors or some of the group companies, let's say infra name or even PSU will talk about, when they have rallied sharply and one doubt come into picture whether continuity will happen or not, it might affect the sentiments in the short term. Answer is yes. Whether it is a 1 week, 1 quarter, or maybe can last for a few months is very difficult to rule that out. We will definitely say it happens and it do have an impact in terms of re-rating or derating. What is very important to understand is that we as a money manager or as an analyst house or research house, we do look at these data points, and whenever we see any inflection points, either on the extreme level, we are buyer or seller in these names also. That's the way we define it. I don't think I will just go by the short-term phenomena of sentiments getting impact. If multiple data points are showcasing, then there's a problem, we will exit. If multiple data points are not endorsing, we'll continue to hold these names. Also, if need be, we can add.
Sure. Thank you so much, Sandeep. It's always a pleasure and so insightful talking to you. Thank you so much.
Thanks a lot.